CoinPilot channel. To receive updates of all cryptocurrencies and Bitcoin news and views, remember to subscribe and hit the bell icon below to receive notifications. Enjoy the video.
I'm seeing it written now, at least on the Bloomberg, that at some point it gets to be so big you have no choice, that you have to be in it as a practical matter. Is that true?
I don't think so. I mean, look at the market cap compared to the market cap of, say, the equity market. I don't really know. Our clients at Brown Brothers, real fund managers, real asset managers, as opposed to the hedge fund community, I don't really see them buying Bitcoins. I see them buying maybe some of the technology companies, the backbone behind it. But really buying Bitcoins, I still don't see it.
The bubble conversations was really interesting, and Aaron Brown wrote in Bloomberg View today. He heads the financial market research over at AQR, and he says, look, prices do not display the long-term dynamics associated with bubbles. And I find that really interesting because he said if institutional money comes in and there's no dramatic price decrease or increase or volatility, that's not a bubble. If there's not a lot of institutional interest and there's not a lot of movement, that's no bubble. And he says we're not there yet. I found that interesting.
But you do hear about institutional, in some sense, institutional interest in the fact that Goldman says they're open to it. Other people are saying they're taking a look at it at least. And now you have the CME about to start trading options next month, right? Will that really establish it more as legitimate?
Well, I think this is part of the problem, is that right now you can't really go short Bitcoins. That futures contract at the CME will allow people to go short. I think this is I think that what's happening is that there's a lot of cash, a lot of liquidity. It's lifting all risky assets, whether emerging markets, junk bonds. And I think Bitcoins, and I don't even know why we call them coins, except that they call it coins in the name, sort of like friends on Facebook. What does that really mean? And I think that this is just, I think that what happens is that the liquidity in the system is lifting all asset prices. And when the liquidity gets drained, Bitcoins or these cyber currencies will also be drained.
But we did see it play a safe haven role in Zimbabwe last week, right? I mean,
yeah, but what does that really mean? I mean, a safe haven from Zimbabwe. I mean, yes, the Zimbabwe currency imploded. Yes, the Bitcoins went up. So did gold.
Not as much, though. So if you're going to look at safe havens, for example, you got dollar, was the dollar, maybe it's the euro, gold, Bitcoin. Like,
no, but
well, how would you rank it?
The Bitcoins can't absorb the kind of liquidity. We're talking about the foreign exchange market, $5 trillion a day. How much is the Bitcoin?
But the Bitcoin has come so much farther, so much faster than anyone would have anticipated. So why do you rule out the possibility that it won't just keep going?
Oh, I think it could keep going. I have no clue where the price is, but I don't think that, as economists, we think that we think we know the price of a lot of things, but don't know the value of anything. And I think that we don't know the value of Bitcoins. We know the price.
But I'm asking about not just price, but also liquidity. I mean, as these exchanges develop and they start becoming interconnected and we start having futures traded and things like that, why do we rule out the possibility? We don't know what will happen, but that is the possibility that it actually does become more like gold.
It could be. I would doubt this. I think there's no intrinsic value. There's no use value. And I think that it lacks the critical mass to be used as a means of exchange. So it's really, you hoard these things, and you look at how much energy it costs to produce these, how much computer power. It's very inefficient compared to even, like, say, a regular credit card.